Good morning, good afternoon, good evening, wherever you are, depending on which part of the world. Welcome. This is Balasubramanian Iyer, CEO of eMini Futures by Cell. Now, this video is not about trading. Even though we are a one-stop shop, the only global trading house where you can do all kinds of trading, day trading, swing trading, auto trading, currency trading, commodity trading, auto swing trading, option trading, wealth management, everything you can do under one roof. And we are the only such global company in this world. We have a global brand and we have a global clientele and we serve the globe. But this video is not about trading. This video is a very, very interesting subject. The year has come to an end, and by the way, wish you all a very happy and prosperous new year 2015. And since we are on the 1st of January on the New Year Day, I thought it would be appropriate that I bring some good news. And I want to show you how you too can become a millionaire in your lifetime by using a software. I'm going to prove it to you. No fake numbers. I'm going to prove it to you that you too can become a millionaire in your lifetime. So this video is about portfolio management, wealth management, net worth management, how to build your wealth. This video assumes you do not know anything about investments. You are a doctor, you are an engineer, or you're a chemist, you could be a lawyer, you have zero knowledge relating to finance, financial planning, wealth management, portfolio building and all. This assumes that you don't know anything about asset allocation. I'm going to show you by using a software and by using some simple techniques, you can become a millionaire in your lifetime. And we'll start with a legal disclaimer. Though this disclaimer is about trading, we are not selling any futures trading software, but this video is not about trading. So I really don't think the disclaimer is required. This video has nothing to do with trading. Zero. This is all about investment, wealth management, portfolio building. Let me ask you a question. And let me also tell you one thing. All of us have two eyes. But did you know you have a third eye? And how many of us bother to open the third eye? So at the end of this video, I promise I will succeed in opening your third eye. Okay? With that mission statement, let's dive into the topic. And the topic is portfolio management or wealth management. I asked several of my friends, including some relatives, did you know at the beginning of the year what was your net worth? And I'm talking about liquid net worth, not real estate. Most of us have real estate, and I can safely assume that none of us are losing money on real estate. Everybody is rich as far as real estate is concerned. But we are in that asset rich, cash poor situation. So that's why we're not going to discuss real estate. And real estate as an asset class is not a matter of concern. If you are holding real estate for the long term, 99% of the time you are making money. It's very rare that anybody in any part of the world, given the global population boom, is losing money on real estate. So I'm not going to talk about real estate as an investment class. That's a separate discussion. I'm making the assumption that all of you are happy and you are making some money on real estate. But that is asset rich, cash poor. So that's not what we're going to talk about. I'm talking about liquid net worth. So I asked my friends, what was your liquid net worth at the beginning, counting everything, 401k, RRSP, TFSA, everything, and your entire family put together if you're married. What was your net worth or portfolio, to use a technical word, at the beginning of the year 2014, which is completed? And what was your target rate of return, your ROR, and what was your actual rate of return? I can tell you not 1%, and that included some of my chartered accountant friends, some of my CA, Canadian CAs and CPA friends. They were all blank. By the way, don't assume that if someone is an MBA in finance or if someone is a chartered accountant, they know about portfolio management and wealth building. In fact, many of them have zero knowledge, zero. So don't make that assumption, okay? So this video is also addressing them. The reason is most of them, if you have a 9-to-5 job, this video is about those people who have a 9-to-5 job or you have a full-time business. Therefore, in your lifetime or in your career, you have not had the opportunity or you have not had the time, okay, to learn the subject. This is not a reflection on your talent or on your merit or your inability or about your lack of knowledge on the subject. That's not, in fact, I assume most of you are far smarter or more intelligent than me. This is not about that. I'm just trying to wake you up and tell you what you are doing, what you're missing in your life. Okay? I'm trying to open your third eye. Listen, do you remember what I said in the beginning of the video? I'm going to open a third eye. We all have a third eye. I'm going to open it. Okay? So wealth management and portfolio building. And we have designed some fantastic software. All you need is to become a client, access the software, and whatever actions you have to take, you will be taking only at the end of the day after dinner or most of the time end of the week. We are not talking trading. It's all about investment. So going back to the question, virtually all of them were blank. Many of my respondents knew a decent guess as to what their net worth was at the beginning of the year. They hadn't put it in black and white, but they had some kind of a back of the envelope calculation in their mind. Okay. Almost all of them were categorical that they did not have a target rate of return. So I asked them, if you don't have a target rate of return for the year 2014, which just completed, how are you ever going to achieve anything? You see, without a plan, without a target ROR, you have no idea what the actual rate of return should be and how are you going to retire. Even I'm not even talking about retirement here, even during a lifetime. Someone who is newly married, okay, with a kid, you need to have a plan how you're going to build wealth. Like if you, whoever is listening, like if you're newly married and you have a kid and you are only 25, 30-year old, if you plan, by the time you're 50, the two of you can be a millionaire. But if you don't plan, you wait for your hair to become gray, and at the age of 60 and 50 and you become wise and wisdom comes, time is not on your side. You may at that stage learn the trick or the art of becoming a millionaire, but it's too late, my friend. So even those who are senior citizens, who are old, who are listening to the video, pass on this video to your kids or grandkids. Let them watch and let them learn from this video how to become a millionaire. There is no hocus pocus, no hanky panky, no illegal methods. 100% ethical and above board method. Okay. But I'm going to show you some secret. And these methods, the people in Wall Street and Bay Street in Canada and other streets in the world, they don't want you to know. They don't want you to learn. Why? Because if you know, they will go bankrupt. So they are keeping you in darkness. That's why they are keep making sure your third eye is closed so that they survive. Okay. So if you're lucky enough to watch this video on YouTube, I'm going to open your third eye and you can become a millionaire without putting your money in Bay Street and Wall Street with brokers and investment advisors and lose your money. Okay. So I'll show you the trick. And here is how it starts. The first thing we are making an assumption that our starting portfolio is $300,000 liquid net worth excluding real estate and net of all liabilities. So you prepare a net worth statement, you list down all your assets minus all your liabilities, and you have a net worth. And if there is any equity in your home, which most of you would have had, I'm not even counting that. Okay. I'm being very, very conservative in my approach. Actually, I should count, but I'm not counting. Okay. So I'm only taking 300,000. Okay, I'm just showing an example. Now, you need to invest in, I have chosen these asset classes, and this is where, my friend, I'm giving you the secret. These are the only asset classes you should invest your hard-earned money. Don't waste your time investing money in mutual funds, individual stocks, and other crap out there. Let me tell you the danger of investing in an individual stock like Apple, IBM, BlackBerry, Research in Motion. The problem of idiot management. IBM, which used to be a darling stock in 2014, lost money big time for the shareholders. Why? Idiot management. They brought a CEO, a lady, and she blundered big time. Idiot management. McDonald now is doing well. But Big Mac, did you know a few years ago, stock tanked and the company was doing very badly. Why? Idiot management. BlackBerry, which used to be called Research in Motion, is a great example. Two people started that company, and from zero, they took the value of Research in Motion to, I don't remember now, maybe $200. Those two people were called geniuses. They invented Research in Motion and BlackBerry. But the same two people, this is a remarkable example. I don't think there is such an example in corporate history like this. The very same two people brought the value of the company and the stock all the way from $200 to a toilet paper, to a penny stock. BlackBerry is virtually a toilet paper now. Okay, the very same people who were once upon a time called geniuses, but now they were called idiot management, and both of them were fired from the very company they founded. They were fired. Why? The geniuses became idiot management. So in other words, what I'm trying to tell you is, don't put your hard-earned savings in the hands of idiot management. Even Apple, everybody loves Apple. What is the guarantee tomorrow you're not going to have idiot management there? There's no guarantee. And don't think that if you put highly qualified MBAs and PhDs, those guys are going to do genius things for you. That's all crap. I can give you hundreds of examples where all these Harvard MBAs have screwed up and the company became toilet paper. Great example, Carly Fiorina, the Hewlett Packard woman. She, I think, is from Harvard or wherever. Every company she took over, she got fired. Every company she was CEO, the stock became down and she had to be fired. So that's a living example for you. So don't waste your money with idiot management. I'm going to repeat it 100 times so you get the message. Stop investing in individual stocks, okay? And stop investing in mutual funds. The MER, management expense ratio, they will kill you. So don't invest in mutual funds. So what you do is, and I have picked these 5 ETF, exchange traded funds. That's where you should put your money, on those asset classes which are not correlated with each other. Diversification. What are they? One is S&P 500 or ES. Then is TLT. This is bonds. Then you have oil. Then you have gold. And then we have EFA. EFA is a ETF for emerging markets, outside North America. So this is a well diversified, non-correlated asset portfolio. Now in this example, you can actually generate, when you have an asset, there are 3 sources of income, but most people know only 2 sources. One source is appreciation of the stock or the ETF. So if you buy Apple at $80, Apple goes to $100, you had a $20 growth in the stock. That every Tom, Dick and Harry knows. Second way of making money is dividend, okay? But there is a third secret. There is a third way. By the way, most companies are giving only 2 or 3% dividend, in North America and Europe. So there's nothing, no big money there, unless you take compounding into effect. But there is a way to generate 10 to 12% dividend on every ETF or stock that you own. And what is that? That I'm not going to disclose in this video. If you become a client, I will share the secret. And let me tell you, smart money in Wall Street, they do it, all the big millionaires and billionaires, they do it all the time. They are generating 12 to 12% additional booster return on the individual stock and ETF. So how do you make money? Growth of the ETF or stock, number one. Number two, dividend, which is piddly these days. Number three, the secret method, the secret sauce, where you can make 12 to 12% extra return on every asset class that you own, or even if you don't own an asset. Do you know you can make income without owning an asset? There is a way. Those secrets we're not going to share in this video. Okay, so in this example that I'm going to show you, I have not counted any of the source number 2, that is dividend, and source number 3, the secret sauce. Since I'm not disclosing that, I don't have a right to count it. So I have not counted. Okay, so I'm only counting the capital appreciation of the individual asset class. So we take 300,000, divide it equally. Then this will, at the beginning of the year, January 2014, we'll start our investment game and we'll stop by the end of the year. And I'm going to prove all these numbers, how it came. So these are real. You would have earned using a software. Let me tell you, this return, these kind of returns is only possible if you use a software. Without a software, you will be like Tom, Dick, and Harry, maybe earning 2 or 3%. Okay. So if you use a software on $60,000 invest capital, you would have made $46,000 return ROR, that is 77%. On TLT, you would have made $13,000. On oil, you would have made 3 times $180,000. On gold, you would have made 61,000. Actually, you would have made much more than that. But already the portfolio was generating like double, more than 100%. And I didn't want to, people will think that I'm making up the numbers. For that reason, I did not count 80% of the additional return that you could have made. Purposely, I took it out. Okay. And EFA is the emerging market. So I'm going to prove all these, that these are real numbers. And these are the ROR. So if you had started, if you were a client at the beginning of 2014 with an original capital of 300,000, at the end of the year, that is now, your value of your net worth would be 315,000 plus 300,000, 600,000. This is what you will be having. You could have had. So this is and what is the ROR? 105%. Let me tell you, in North America, you talk to any investment advisor or certified financial planner, 99% of their clients, that is the one to whom they are advising and managing, they are not making even 10% ROR on the portfolio. Let me repeat, 99% of North American people who have investment advisor and financial planners, where their portfolio is being managed by these jokers or Johnnies, they are not making 10%, not even 10% rate of return on the portfolio. Whereas with our software, you can, if you become a client, with our wealth management software, you can make 105% rate of return portfolio. You can generate. Now you may make an argument, play the devil's advocate, say, come on, give me a break. You just got lucky in 2014. That's not possible, blah, blah. There is always the naysayers and critics out there, armchair critics, So fine, let's give them a fair shake. Okay, not 105, maybe 30%, even if I discount 70%, saying that 2014 was a lucky year for you, okay? We're not going to make like 180,000 in oil. Even if we take that, because oil had a big fall. So if you take all those arguments, still you do 30%. And let me show you, let me go even more conservative. Let me show you something. If you have $300,000 starting and we are taking 20 years and I'm counting only 12% rate of return, okay? This is 105. And I told you I'm telling you with our software, you can easily, even if you discount 70%, you can make 30% annual rate of return on the portfolio using our software. But I'm even discounting further and I'm taking only 12%, which is still beating the market. 99% of people in North America, even the millionaires, are not making even 10% ROR on their portfolio. So I'm taking only 2% extra. Did you know future value of an amount? If you take 300,000, you take 20 years, you take 12% compounding, that becomes $3 million. And I have not taken in this calculation, I'm assuming that the 300,000 stays as it is. In 20 years, every year you have a job, your family, you and your wife put together, you will have net savings after paying your expenses. So your net worth is growing. You are adding to your net worth, right? You have savings. I'm not counting any of that to be ultra conservative. So you're taking 300,000, that's it, I'm freezing it, okay? And for 20 years, if you can get 12% rate of return, you can make, that can become, you not one, to be a millionaire, you need 1 million, but I'm making you 3 million. That's my promise. I'm opening your third eye, my friend. And most people, what are they getting in North America? You know, the people who have a 9-to-5 job and who are totally blind and ignorant, they probably are getting like 5% if they are lucky. If they are very lucky, that's all they are getting. So can you see the what if analysis, the sensitivity? Just by changing the rate of return, how from 3 million, you became 700,000. You become a pauper virtually. You get, that's nothing, right? You see, therefore, this rate of return is so vitally important. And the only way you can get the 12% is by using our wealth management software. We have a very special wealth management software, you know, portfolio management software. Now you can laugh your way to the bank, and when you see, next time when you see an investment advisor in a mall or somewhere, you tell him, why don't you become my client? I'll teach you more, you know. So you can tell them that. So this is the secret. This is a secret, my friend. First, get to know your net worth. Find out what your portfolio is. Have a target rate of return. Then monitor. If you have a target, you have to every month see what is your actual cumulative so that you achieve your ROR. What is your portfolio ROR? If you don't know the answers to these questions when the year has just ended, you should be feeling a sense of shame should come to you. You should be burning within you. How come, like an idiot, I don't even know what my portfolio return? By the way, calculating the actual ROR is not that simple. For the purpose of this video, I made it simple because there will be investment withdrawals. So to really calculate the actual ROR for a portfolio, you need complex mathematics. That's beyond the scope of this video. And we're not discussing that. I made it simple, okay? So there are two problems. First, most individuals do not have a target rate of return. Second, most individuals do not know how to set a target rate of return. What should be your target rate of return? Should it be 10%? Should it be 5%? Should it be 12%? Should it be 30%? Yeah, everybody wants 100%. I'm not talking about that. What should be the correct target ROI? That's a big exercise. It's not an easy answer. You have to be our client, and then we'll teach you how to calculate the target rate of return. There is science involved here. You know, if you are a certified financial planner and if you're listening to this video, you will know the answer. But if you're not, you don't know what the answer is. The second question is, once you have fixed the target ROR, how are you going to achieve it? If you're going to put your hard-earned money in 401k and individual stocks and some pension fund or some, you know, mutual fund, zilch. There is no chance of you becoming a millionaire. No way. It's a pipe dream. It's not going to happen. You're wasting your time. You're wasting your career. The one and only way, in our view, and we assert, and there is a little bit of sales promotion I'm doing here, you have to become a client, you know. Then we will open your third eye. And I hope I have already opened your third eye by now, what you are missing. what the sensitivity, just because you're getting piddly rate of return, you're not becoming, the government, the Bernanke, by taking the interest rates to zero, what they have done in the olden golden days, when you put money in fixed deposits or GIC, you used to get 10% and all that. Now you're getting only 1 or 2%. So what they have done, they have stolen this from you. They have transferred the difference between, you used to get back in the 60s and 70s, people were getting 12%. Now you're only getting 2-3%. Why? Because they've stolen it. The governments of the world, all over the world, they have stolen it. And who has taken it? The big corporations. They have transferred the wealth from individuals to corporations in a very surreptitious way, in a very insidious way that nobody can figure out what the hell is going on. But anyway, that's another discussion. So, but in spite of all the efforts they are making to transfer your wealth, you can get it back. You can outsmart them, So if you use a software, you can outsmart them. So now it's time for me to prove the numbers. I made up all, you may be thinking, oh, you made up these numbers. No, it's real numbers. So let's start. So we started with $60,000. So our first investment is EFA. So how this was going to be achieved? We use the weekly chart, and we are in 2014. This example is for 2014. We have a buy signal in EFA. So we want to go long. So we're going to use the daily chart to get an entry. And our first signal was here, okay, at 64.9. So what we do at 64.9 times 60,000, so you are buying about 920 units approximately, okay? So that's what you're buying. And then you held on to your investment, your holding, and on the weekly chart, and I'm assuming that somewhere it went up to 70.9, but before that 70.7 you cashed out your ETF, okay? So 70.7 times 924, this is how the ETF looks, value of your holding in June 2014, okay? So difference between the two is $5,000 profit in 6 months on your investment in EFA, if you had used a software. Then what happens is you have a sell signal in EFA. So that happened in July 2014. You see, everything the software is telling you what to do. You don't have to spend your hard-earned salary with the investment advisor and financial planners and mutual funds and blow your brains out. Software is telling you, sell all the way here, somewhere here, you're cashing, okay? So if you take here from 69, it went down, EFA went down, and you can see the emerging market EFA is down. Huh? By the way, in the television, I'm going to go off tangent, they keep on talking about how you should invest in emerging markets, how you should diversify it, and blah, 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 blah. Can you see, if you had invested money in emerging market EFA, you basically lost money, unless you shorted it. Here, I'm assuming that you went long, and when this came down, you took a short position, okay? So either directly, in this example, I'm assuming direct short, but if you can assume you will use ETF. So you make money on the long side and you make money on the short side, both, okay? So in this example, I've taken that. I've taken another $8,600 profit on the short side, $9 profit. And so total profit is 13,000. But you may argue, I'm not going to do shorting and all. I have a job. I can only make money. Maybe I make money with options, but I'm not going to make 8,000 and all, So let's just even get rid of that number, okay? Somebody will say that we don't know how to short and all. So I'm getting rid of that number, okay? So I'm only taking the long side, okay? So I dropped it. And I'm not even counting option income, which I should. Actually, I can sell put options here and generate a lot of income. I just, there's so much of money, I'm ready, I can even give back something. So I just gave it back, okay? Now let's look at S&P 500, okay? So let's go, and because I'm trying to prove all my math to you guys, I don't want anybody telling me that I made up these numbers. Because you need to understand the profit potential, how much money if you can make by using a software. So in 2014, right away we had a go long signal. So we're looking for an entry. We go to the software, and somewhere this is a first, this is our entry. First entry came here, signal 1813. Okay. So 1813, S&P 500, all the way it went up. I'm assuming for the purpose of this example, during the year we ended it at 2088. I'm assuming at this 2000, you decided enough is enough and you decided to fold your portfolio. So you held on from 1813, and here itself we are above 2000. So we're not even participating in the market action here, which if we did, you will be making more money with options and other things, but I'm not even counting all that. So I took 2000 minus 1813. Each point is $50. You're holding long. So as a salaried person, you can do it. You have $60,000. I've taken 5 contracts, including overnight margin. Actually, I can buy more contracts. For the purpose of this example, I've taken only 5 contracts, $50 a point, X number of points, you made $46,000 profit. So do you realize with $60,000, you the salaried person, if you invest in futures contract with a software, including overnight margin, how much wealth you are generating? Whereas when you are putting money in individual stocks and individual mutual funds, you are not making $46,000 with them. Even if you had $500,000 investment in a stock, you're not making 46,000 unless you have a home run. Unless you were lucky enough to buy Google at $80 and now you say with Google at 500, none of those, dream scenarios. Okay. So do you see how much money is there if you put your money in the futures market? And they tell you futures market is all risky. Wrong answer. We are not talking trading. We're talking investment. Futures trading is risky and blah, blah, blah. But we're not talking futures trading. We are talking futures investment. And that is called as managed futures. There are funds out there which specialize in this idea, and they are called managed futures. Okay, that's another discussion, what they do and what you can do. What they can do, you can do too. You don't need to pay them the high fees. By using our software, you can outsmart them. So that's the amount of money you could have made. And there was no risk here. If somebody says, I would have lost my 60,000, no way you would have lost your 60,000. Because the software is protecting you. If there is a problem, there will be a sell signal. There was a sell signal here, right? So don't worry about all that. People who tell you that this is, our software is special, and we can also bulletproof your portfolio through collars. In option strategy, there is a strategy called collar. You pay some, that's like buying a disaster insurance with a collar. You can bulletproof your portfolio. I can teach you all that when you become a client. Okay. So that's how we got this return. Okay. But I'm going to discount all this. You may make the argument, this is all, I'm not so smart, I'm dumb, I'm not going to make. Okay, you make half of it. Okay. Then let's look at TLT. So TLT, that's what we did. We took the price when we invested, it was 104.6 the beginning of the year. TLT went up, price appreciation times the number of units with the invest 60,000, we got this profit. So let's prove it. By the way, most of you were watching the video, you never heard about TLT. I wouldn't be wrong if I told you that there was, and you know what this TLT is? Government bonds, US federal government bonds. There is no risk. This is not junk bond. TLT is not junk bond. TLT is not toilet paper. It's the bloody US government. You're holding their paper. There's no way on earth it will go to zero. And our software gave this a buy signal. Did you know there was so much money to be made in an asset class like TLT? Safe. It's bonds. There is no idiot management here. Okay. This stock ETF, there was so much money to be made. This TLT went up from 104 to so much. What a move, what a move. And I actually, in my example, I'm not even counting. I'm assuming I'm cashing out early, okay? So that's how we got the return. We took the rate of appreciation, number of units, 13,000. Next is oil. Of course, oil, we were lucky because you could argue we're not going to get that kind. So I'm going to discount it, okay? But I just want to show you these are not made up numbers. These are all real numbers that I have taken, okay? So I took, crude oil, the appreciation from here to here, and then the drop all the way. Remember I made the video who predicted the price, the Bloomberg and other channels were saying that nobody saw this, and I was challenging them. With our software, you could have made all this money, okay? So that's what we have done. So what we did in oil, there was initially, you see the, this is where you started beginning of the year from 100. You made 5 points in oil, so $5,000. Each point is each dollar move up is $1,000. I'm assuming 4 contracts. By the way, 60,000 I could have bought many more contracts. Okay, I'm being very conservative. 4 contracts, 20,000. And did you know this fall in oil? You could have made $160,000, $160,000. You know what you had to do? All you needed was $60,000 in your account. And 4 contracts. Actually, you can buy many more. I'm only counting 4 contracts, crude oil futures contract. You short in your futures account. And how did we get $40,000? This is how. Crude oil dropped 40 points. And I'm counting from here. Actually, it fell more, but I'm counting from here to here. This was a 40-point drop times 1,000, 40,000, 1 contract, 4 contracts. So with 1 contract, you could have made 40,000, 4 contract, $180,000. And you may ask, I don't know how to short. No, there is nothing. There is no rocket science. You open an account with a broker, you put $60,000, you use this software, you go short 4 contracts. So your $60,000 covers your margin, and already you are in profit. So no margin problem. With $60,000 starting, you invested 4 contracts short in July with our software, and you are laughing your way to the bank, and you have generated this more than 140,000 profit. 60,000. So you may argue, listen, we just lucky. This is not going to happen every year. And that's a fair point. This is not going to happen every year. So I'm just going to arbitrarily make it only 50,000. Arbitrarily. I'm just slashing it. Okay. I'm just slashing it. Next is gold. Just to prove with our software, you can beat the market and all the outside world easily, hands down. Okay. Our software is so good, my friends. If this is not convincing, I mean, these are real facts I'm showing you. I'm not making up numbers. Okay, I can go to the US Supreme Court and prove this, So let's look at gold. This is what tells you lack of knowledge, lack of wisdom. When you are ignorant, how the world fools you. The great Voltaire and Rousseau said, man is born free, but everywhere he is in chains. They said it. They said it so many years ago. Even now it's true. Man is born free, but everywhere he is in chains. There is independence, but there's no independent thinking. This is the biggest problem in this world. No originality, no creative thinking. If some Harvard MBA comes on TV and say quack, 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 we blindly follow them because we have been oversold that people with high degrees are geniuses. That's not true. Okay, so anyway, let's come here. In fact, most of these great professors don't have millions of dollars. Have you seen a rich professor? I've not seen a rich professor in my life. So anyway, so gold, we just took, gold, we could have made a crap load of money. But I just took this buy beginning all the way up. Actually, did you know gold shot up in the beginning of the year? Wow. Maybe it will repeat in 2015. Huh? Who knows? And with our software, this making money is a piece of cake, my friend. Buy, sell. I'm not fudging anything in software because what is unique about our software? We use order flow. Our software is not based on price. We don't use technical analysis. We don't use MACD, RSI, stochastic, Fibonacci. If you use those numbers, you will only get 2%. If you use our software, you get 100%. See the difference? Technical analysis will bring you grief. So don't waste your time there. So order flow. With order flow, we find this. Okay. So now, so I've only taken this. I could have taken all the money later on because I don't want people to tell me you're just making up numbers. Just for the fear of that, I didn't take it, you know. So I took the 1390. This is where we bought. This is where we sold. Each point in gold futures contract is $100. Again, I took only 4 contracts with 60,000. I can easily buy more than 4. Okay. But just to be safe, you know, I don't want people saying this is made up. This is the biggest danger I'm running into. Even though I'm proving the facts right in front of you, some of you will still say this is not the real market. You made up this gold market in your computer. I'm sure there are people who say like this. You know, there are all kinds of crazy people in this world. So 1390, 1237, $100 a point, four contracts, 61,000. Do you realize? On $60,000, you could have made so much of money in gold. There is money to be made out there if you only know how to do it. And they don't want you to know because they have to survive. That's the reason they keep your, why do you think Uber taxi is causing a revolution in the world? The existing taxi people are being shaken. Suddenly, Uber is a disruptive technology, you know, and they're opening the world, you know. Anyway, I don't want to go off tangent, but it's a similar example. So anyway, so I'm not trying to promote Uber here. Huh? So anyway, so 61,000, that's the return, and you can even discount it. You can make it half, and then EFA I've already shown you. And you may say this is all made up and this and that, and so okay, I'm making it 20. Just to make you guys happy. Okay. Okay, somebody is calling me. I got to. Excuse me. Hello? Yeah. Yeah, Oscar, I'm recording a video. Can I call you back? Yeah, I'll call you back. Huh? Thank you. Yeah, so you can see I just randomly am slashing. Okay, you can see now, even after randomly slashing, the portfolio return still comes to 46%. And all you needed to become a millionaire with our software was 12%. So even after all slashing, I'm still 4 times this number, 4 times. So how much discount you want to do? Discount it as much as you want. Even then, with our software, you can easily, and again, let me tell you, this is very, very important. Always think in terms of portfolio. Don't be micro. Don't be piddly in your thinking. You know, way back in one of my webinar, I said, if any of you are looking at sales flyers, you remember we get these sales flyers or other junk in our mail, and many women, and you know, I don't know, even if men, they look at these flyers all the time looking for deals. Never do that. Never do that. If you are that type of a person, you are a loser in your life. You know why? What's the problem looking at flyers and trying to look for a deal? What's the problem? The problem is you will think like a clerk, like a clerical staff. You may be very intelligent. You may be a PhD. I've seen PhDs and MBAs who look at flyers and look for deal. What does it mean? In their mind, they think small. Once you start looking at flyers, you will think small. You will stop thinking big. You have to think like a CEO of IBM. You know, the great Robert McNamara said the law of analysis, you know, look at the big picture. Always think, you may not be CEO of IBM, but nobody is going to stop you from thinking like CEO of IBM. Okay. So start thinking like CEO of IBM or the CEO of Apple. Think big, think broad, be dynamic in your thinking. Don't think like a piddly loser looking at flyers. Anybody who stop looking at flyers, you'll be a loser in your life. It's about behavioral finance, behavioral science, and psychology and attitude formation. why you should not be looking for petty things in life. We'll talk about it more, but it's very important. So you have to think big. Think in terms of total portfolio. Don't think in terms of individual. Oh, I negotiated this mortgage. I got 0.5. I made a deal. You know, I bought this stock and and you got a pat in the cocktail party. These are irrelevant. Think big. Think the big picture, the whole portfolio. Okay, it's very, very important. Where is your portfolio? Where is your portfolio target rate of return? Am I on target to retire with 5 million? I need X target rate of return. Am I beating it? Am I crossing it? These are big picture issues. This is what you got to think. Okay. And mind you, I have not talked about life insurance. That's another big topic. One of my favorite subjects, how you can build wealth using life insurance. So friends, I hope I have convinced you. I'm also planning to, before I conclude, I'm planning to launch a product called Portfolio Evaluation Service. I know you people, none of you want to disclose your personal net worth and dollar amount. I don't need that. All I need is percentages. If you tell me I have 10% in stocks, 20% in 401k mutual fund, 15% in cash, I need percentages. I can critically look at your portfolio and tell you what is wrong and how you should fix it. And I'll be charging a one-time fee, okay, of $500. So if you're interested in this portfolio evaluation service, please contact me. And this is the email. I will right away tell you, and you know, for this portfolio evaluation service, you go to the financial planner's advisor, they'll charge you nothing less than $5,000. Okay, so you're getting a big deal. Okay, so and I will tell you unbiased. They are all connected to institutions, and they'll give you all biased advice. I'm giving you unbiased, independent, and I'm well academically qualified. I have 3 academic qualifications. I have CA, I'm a chartered accountant as well as a certified public accountant, and I've worked as CFO of public companies across the globe. I've worked as chief financial officer of public and private companies across the globe. So I have the right academic background and the right practical experience to talk about the subject. Okay, so and I've been investing a lot of time researching these topics. Okay, and I still spend a lot of time, and so I don't need, so portfolio evaluation, my friend, the $500 you will pay to evaluate your portfolio will make you $1 million. Okay, somebody needs to open your eye, your third eye, and tell you what you're doing wrong. Often we don't realize what we do wrong. You know, we only look at our neighbor's mistake. We never look at our mistakes. That's why I'm telling you. And you don't know me at all. Through online, you just send me the money in PayPal and give your portfolio. I'll give you the critical analysis and I'll put you on the right path. The right path is the winning path. Okay. So if you want to be on the winning path, you better contact us, go to our website, and the email address is there. Again, we are not talking trading. Even though I put the disclaimer, we are not talking trading at all. We're talking about investment management, wealth management, portfolio building, portfolio management. And the purpose of my video is to, and the video concludes here. Hopefully I opened your third eye and I'm showing you how much of money is to be made if you invest and think in terms of portfolio asset allocation and portfolio and doing the right way, not the way they teach, using our software and do it yourself. Simple order flow management software. You know, with those guys, if you do, and you know, I already showed you the difference. If you go to them, you are only going to make 3 or 4%. Ask your broker or investment advisor, you know, how many years you're with them. Ask him to show the yearly rate. This is what you make, even if you make 4%, you know. Most people are not making 4% on the portfolio. In North, because of the zero interest rate, they are not making 4%. Very few are making like this. The number of individuals in North America who are making 12% rate of return annual on their portfolio, you can count them in your fingers. Okay. I'm not saying nobody is doing it. Some very smart people are doing it. Maybe they are doing it by coincidence. Who knows? Or by luck. But you don't need luck. With our software, you can do it bang on your own. And it's very simple. No trading involved here. Okay. So this concludes our video. Even if you're not convinced, at least I hope I opened your third eye. I promised to. That was my mission, you know. Whether I succeeded in whatever way, I don't know. Hopefully, with God's grace, I succeeded in opening your third eye, you know, awakening. The road to knowledge, the road to freedom is awakening, my friend, awakening. Rise up. Get alert. You have to be alive. Anybody calls you, how are you? I'm alive. I'm alert. Say it 10 times. I'm alive. I'm alert. I'm alive. I'm alert. I'm alive. I'm alert. Keep saying it as we conclude this video. I'm alive. I'm alert. I'm alive. I'm alert. God bless.